The wild crypto swings continue. We've seen some massive pumps yesterday into the New York session. We spoke about that. We said Asia dumps, New York pumps, and then they fail, right? And we got smacked back down once again. I did warn of this. I warned of the potential trap scenarios and said that your best way to handle the market right now is to look for free opportunities in the market, of which number one, I'm going to give you a free opportunity in today's show. And number two, I said focus on the low time frames. Otherwise, you are going to get absolutely smacked around. You want to take those trades at the extremities, and the volatility is not only limited to crypto, but we saw wild swings in both silver and gold yesterday. So commodities putting in crypto like volatility and moves. And in today's show, we're going to talk about why this is it. 72 hours left for crypto. What does that mean? Stay tuned until the end if you want to find out, and we'll get straight into it. So big swings, 𝗏 one of the biggest swinging charts actually in the markets. This thing is absolutely all over the place, producing huge moves. So how do you protect yourself? Limit the amount of capital that you're trading with and reduce the leverage slider, right? That's going to be your best bet and your best friend in the coming days and weeks as this volatility tries to work itself out. And we're still on the cusp of a big move, right? Remember, the Bollinger Band width percentile has been recontracting for many months, and now it's just starting to cross over the 10 percentile mark, which means you need to take the direction of the next move very seriously, because it's likely the real move, unless this does break back down once again. But if you do get confirmed expansion over here, whichever direction price is going in during that expansion is most likely going to be the real move, right? I want to remind you that this is direction neutral, which doesn't mean, it means that it's not calling for up in price or down in price, right? It's just telling you, hey, listen, a big move is about to take place and you want to be on the right side of that trade. So let's get into it very quickly. Gold putting in a pretty sizable pullback over there. We're on a TD sequential 9 top. I believe it's on the weekly time frame. So we said that can create a 1 to 4 candle correctional consolidation. But from the major highs over here, 8.68%. This is absolutely enormous. In terms of market cap, you're wiping out probably, trillions, because the gold market cap is so much more significant than crypto. So to lose almost 10% overnight is a big number. But you're starting to put in a bounce. We're looking at the Fibonacci levels. You did also meet the measured move. If you work out the measured move off of this chart pattern, which is a bullish pennant, you got your flagpole coming into the pennant breakout. You hit exactly at that target. So the trade was essentially over. Now what you're going to be looking for on gold is most likely a consolidation. So if you can consolidate between the 0.382 and the current highs, it will probably be a bullish consolidation, to be honest with you, that might lead to higher prices. That begins to change if you break below 3,847 on gold, which is your white line. Breaking and holding below that would therefore suggest that the major top is in, but you have untapped liquidity when you have multiple daily candles in a row with similar wick highs. That shows you liquidity ripe for the taking. You can look at silver as well. Very similar type of move, of course, because in the metals category, and this was also sizable from top to bottom, 12.82%. So trading at a much higher rate than gold over there, a higher beta play. I would measure from the major low over here, and you can have a look as well at that 0.382 fib and the 50% level. Those are going to be major support areas. So if silver comes down to about $44.50, you expect a range to develop between there and the $54 highs, right? So that's what I'll be watching over there for the commodities. Not that I'm actively trading them, but there are traders in Whale Room that are purely dedicated to this, right? So if you go through into Whale Room and you go under Farouk's section, let's see, I didn't even look at his stuff, probably was trading gold yesterday as well. He's mostly been trading gold. So you can go and have a look at those sections over there. And then we also have Wall Street Sailor Singh, who also trades all the various different stocks. By the way, we are going to cap the amount of people that can come into Whale Room after November. So if you're looking to get in and you want to lock in a better price, the prices will probably rise. This is just an annual increase as per inflation. So if you want to get in there, jump in while you still can. Alrighty, let's get into the crypto sphere. What's going on over there? Where are we at? What's happening? 51% on the short side, 48.9% on the long side, a very small skew. This is not significant. We're still waiting for those big numbers to say that we're reaching either a major low or major high, depending on which side it's skewed. In the moment, you're going to be looking for big skew on the short side, like negative 5, 6, 7, 8% coming into a key low. That becomes a bounce territory. We're not there yet. You did get an uptick over here in the 24-hour liquidations, 650 million for the last 24 hours. And the developer made this pink. So we're going to have to talk to them. It is a girl that develops the site. But the daily exchange volume still coming down, right? Still coming down over here. What you're looking for is major support. Imagine you can draw in a trend line over here. That's going to need to defend that $75 billion mark, which is where you're currently coming in. We want to see price bounce over there if bulls have any hope. And if you're in the Whale Room Zoom session that we did yesterday, one of the things I wanted to mention, which kind of creates a little bit of a complication in the market, is we had been looking for weeks at this ETF spike over here coming into play, suggesting that you might get a major top that comes in because the ETF flows, when they spike like this to record highs, that's a good indication that you might be putting in some sort of a local top or even a major top, and you might need to correct or consolidate for a few weeks, right? Why is this a complication? Well, as per the Zoom session yesterday, for those of you that are in Whale Room and you missed it, maybe I'll just quickly update you. The reason that this is important to focus on is because given the extent of this ETF flow, it tells you that you probably need multiple consecutive weeks in a row with some outflows to stabilize price. The problem with that is that we've been paying high attention to the daily exchange volume, and because we're at such a critical point within the market where we really need to see bulls strike back, otherwise it can really start to get ugly. The problem is that this is telling us we need a few more weeks. This is telling us that we're running out of time and we don't have a few more weeks, and if bulls don't strike back very soon, you're probably going to lead to a bit of a breakdown over here. So that's a little bit of throws a spanner in the works, as the saying goes. And we have a lot of economic data coming up. We'll talk about the price charts, but the jobless claims, consumer confidence flash data is coming in, existing home sales is coming in. All of that is going to be coming in tomorrow, and I expect that this could drive the next move. So I'm not going to sugarcoat it. It looks bearish. Honestly, it looks bearish. It looks more likely to continue to break down than not, especially if this candle closes red over here. Yes, you do have major support that's coming into play over here with the 50 MA and the 50% level at the key psychological round number. So you can call that 3 reasons for potential support. 1 is the moving average, 2 is the 50% level, 3 is just the round psychological number of $100,000. But look at that. Yesterday we had a big spike up, rejected again off of that 21 EMA. And if you simply just want to draw an easy line in the sand, it's that. If bulls can start to get back above that 21 EMA, there's hope. As long as you're below that, you have to maintain a bearish bias with, yes, you'll get bounces along the way from this region, but you should expect that those bounces are going to be met with sellers taking control. And again, tie that in with what I just said, right? Daily exchange volume is still tanking. So there's not really that much optimism from my point that this is going to bounce off of here. And remember about 2 weeks ago when we had that massive dump on the Friday, I said that the next 2 weeks are going to be incredibly telling because we don't know where's the new buyers going to come from, where's the volume going to come from. This spike up in volume and volatility, which is typically viewed as a good thing, was created by people having to reshuffle and reposition. So I'm not going to sugarcoat it, guys. The bears are in full control. They maintain full control as it currently stands. And we said yesterday, when I always summarize everything that I say in the video, they need to get above $115,000. And until they can do that, it's bearish. That is the way that is. It's just bearish. You are struggling over here. Yes, you have bounce zones along the way, and you're now contending with final major levels of support, which we can show over here on the daily time frame. This is a big level, a very significant level. If this yesterday's move was a trap, and that's another lower high in the making, and you're going to extend this downside move, what is this going to look like? It's going to get more painful in terms of the fear and greed over here, which is sitting at 25. We're on that capitulation territory, and unfortunately, not everything is lining up. I wish that we're seeing capitulation-like signs over here in terms of the sentiment, as well as in terms of the funding. The funding is teetering capitulation. It's kind of in that fear zone, meaning negative funding, but it's not skewed enough. If we had this, if we had extreme fear, if we had capitulation-like signals in terms of negative funding on the high time frames with a massive skew over here on the short side, showing that there's many more shorts jumping into the market, while simultaneously this was hitting key support, and we had the ETF flows, which had been negative already for 2 or 3 weeks. Great. then I would say, okay, cool, now I'm willing to bet on the bullish side. But unfortunately, the stars are not aligned right now for the bulls. That's the truth. The stars are not aligned. You're rejecting from key levels. And this is telling me there's a good chance that this could fall through and go a little bit lower. Now, I hope to be proven wrong, but the momentum is on the bears side. MACDs are rolling over. RSI is still coming down. There is a bit of hopium that you bounce out of this territory, as we've spoken about for the last couple of weeks. And nobody wants to be the bearer of bad news, right? I don't want to be that guy, but it is bad. This move up over here yesterday set in another large trap. As you can see over here, where did price run up? I told you, reclaim 115. That was the level. That was the level to get back above. Get above 115. You couldn't. You rallied straight into 114 at that key level. Remember, I brought it up as well yesterday. I said, pay attention to what's happening over here with the liquidation heat map, because there is liquidity over there. But the bad news is that liquidity is still below the key level that must be reclaimed, which was 114. You ran into that liquidity and you immediately rejected and came through. So now basically this is the level to reclaim. If you can start to get back above yesterday's high, we can just lower that level. That's the way downtrends work, right? First you say, you must get above that level, then that level, then that level, then that level, and you just keep riding the downtrend until that downtrend ends. So this is the level to reclaim. Not much better than yesterday, but in a few days, weeks, or months' time, this could be lowered a whole lot more. So right now, the level to reclaim is yesterday's high, which is about 114,300. Now, I just want to be clear, I'm not here to scare your socks off, as I've mentioned before. There is opportunities out there. I'll try and give you an opportunity today that might lead you to double your money with almost no risk. I know that sounds like some sort of a clickbait thing, but just stay tuned until the end, and I'll show you exactly what you need to do. Also, with that being said, we know that we printed on top of that the bear moon, right? You got the bear moon right on that spike, exactly the level that must be reclaimed. So, if you thought you were down and the bullies were beating you, they can kick you 3 more times in the stomach. And until you get back above there, expect to get kicked. Okay, if you're long, that's if you're long, right? If you're short, you're probably pretty happy over there. So what we don't want to see is the big deviation over here. I told you to pay attention to the volume as well. And if you have a look at that volume, and we just zoom in over here, and you look at the bottom of the chart, you could see that the volume was getting weaker, right? So this little pump up over here had higher volume than the following attempted pump. Look at those green candles, and that showed weakness. But if you look over here, the sellers are also significantly high in terms of the volume chart than what the buyers were, which again just reiterates and shows that they maintain control. They are maintaining control. Now, we said don't write off the opportunity of taking long trades on a low time frame. This is now covered from the beginning of this video until now is high time frame, medium time frame traders. You're a swing trader, you're an investor. That was the important part for you. We can move into the low time frame traders. Low time frame traders, yes, I was looking for a long trade, but it absolutely did not get triggered, because the only way that would trigger for me was if you swept the Monday low like that and then you reclaimed. Remember, I did drop this as well in Whale Room. If you go into my particular section under Captain's Take, that was pretty much what we're looking for. There it was. I wanted to see something like that, and I said, I just don't want to take the trade unless we get that, because I need it to be clean price action. You didn't get it. You got this pump up. I, of course, did not chase that. You swept the Monday high, previous month's mid-range, and it was straight back down. So still the same trade setup applies, right? The same trade setup applies, and you can go on to the futures chart over here, and you can see that also sweeping that Monday low and the previous month's low lines up with that CME gap. It's a very, very, very small gap over there that was created the start of this week, but that still maintains the level to reclaim. So for the low time frame trade setup, if you want to take that trade, just watch for price coming down, sweep into the CME gap. If you get a reaction and a reclaim, which would literally look like this if we use our little arrows, a little drop down, a little bit of a reclaim, a little bit of strength on the low time frames that kicks in over there. Then you have the long trade opportunity. You can trade this to mid-range. If it rejects over there and finds support again, then maybe even back above the range high. So that's kind of the trade. So yes, let's make it very easy for you guys, because I see in the comments Dan saying 107.5. Like I said, I'll make it very easy for you, right? The bottom of the CME gap comes in over there. Just screenshot that, 107,355, and the the top of the CME gap comes in right at that Monday low, and that is exactly 107,715. So basically, if you can find your entry into the sweet spot, remember, don't blindly take these trades. This is what creates a little bit of a complication as well lately with the difference between the Asia and New York session, is it's hard to monitor these trades because the swings have been so wild. Like, you have to be awake for all hours. But genuinely, you would be looking for something like that into the middle of that gap, sharp reaction. You know, look for a little bit of a shift in structure over there, a little bit of a high low that forms. Maybe if you want to be patient, you wait, sweep those highs, create your first high. So you got a market structure shift on the low time frame, and then you can buy the next high low. The reason that I didn't want to take this trade yesterday as well, is let's just zoom in, is because where would I place my stop loss? That was the problem with this, right? Even though I knew there was a possibility this could run up, I wanted clean price action. I wanted this so I can place my stop loss over there. Otherwise, where would I place my stop loss on this trade? If I was trying to trade that Monday range, I would have had to put it, you know, like somewhere down here or maybe over there. So I still think this liquidity could be swept. This is for the low time frame traders, right? So we've covered things for the high time frame. Don't leave if you're a high time frame trader or medium time frame trader. I still have the opportunity for you. Before we move on to more low time frame stuff and look at some of the altcoins, let's actually talk about what is that opportunity. Okay, here's the opportunity. We've spoken about it before. I'm going to just give you a little bit of a further breakdown in terms of the metrics and how this works, and you can run the numbers in your own head as per what sort of gains you could make off of this free. It's basically a free opportunity. You'll risk a little bit of capital, but as long as you are hedging your bets, you should be absolutely okay, and you won't lose really anything, right? So what is the opportunity? Go to the link in the description below if you haven't already. I know there's a bunch of you. I think that so far I've seen there's about 5,000 of you that have joined the campaign, and that is the Gravity trade, right? The Gravity airdrop trade opportunity. So you need to use that link to be able to participate in the same team that I'm in. The more of us that join into the team, the better, because we get accelerated points, right? You get additional points by being part of the team. So click that link over there for Gravity, sign up, join. It will open a page like this. You connect your email address. There's no KYC or anything like that. You deposit a little bit of funds on, and then you take the trades. Now, I just want to show you what my volume is so that you can consider the following examples. For those of you that were maybe around, I think it was about 2 or 3 weeks ago on a Friday evening, depending on which part of the world you're in, Friday morning if you're in the US, we did a banter royale competition, right? Where we just messed around for about 45 minutes to an hour trading on here. And I started with just not $100,000, just $1,000. So I took a little bit of a loss in the sense that I lost $20 of the $1,000 over there. But what's more significant and important about that is the volume that was generated. And I'm going to show you how this all works together, right? Have a look at this. So if I go to my portfolio, it's a minuscule, tiny account. It's like dust, right? Off $1,000, I traded in. These are the only trades I took. Just by the way, the trades that I took in that live session, and you can go back to watch it to see how easy it is to make this type of volume, $30,000. I did $31,271. Now there's an airdrop calculator. Big shout out to Alessandro, who occasionally streams on the channel on Saturday. He created this airdrop calculator. And if you go and look at that, and we just plug that number in, 32,271, and we go to Gravity. So $32,721. Okay. That, under the presumption, which these are very, very, very fair estimates, that the estimated fully diluted valuation for this project is going to come out at $500 million. We're comparing to things like Lighter, Paradex, Pacifica, Hyperliquid, which actually came out at 45 billion. Massive, massive, massive. So we're going on the very low end estimate, and they're going to airdrop about 20% of the points away. So under the presumption that I do or have done $32,721 in volume, I would get $535 airdrop. I mean, is that not free money? Is that not free money? Please, if anybody disagrees, let me know. But to me, that is absolute free money. That is on 30. Guys, you have to understand, I put $1,000 on. We messed around. I took a few trades. I lost $20. Go and watch the video. I took like 3 different trades. I made $32,000 in volume, which qualifies me for $535 if these estimates are correct, which I believe they are. We know already that we're getting 20% of the airdrop points. And as the banter community, you guys are basically the earliest of the lot. How does this work? The airdrop points will obviously be in 𝗏𝗏𝗏𝗏 tokens. So this is estimated to be somewhere around the end of this year, beginning of next year, that these tokens will come out. They hit the market. Of course, you can liquidate them or hold them for the long term, do what you want. But that's the volume. Now, let's go with a more realistic estimate. If I'm not going to necessarily trade on 𝗏𝗏𝗏𝗏 with my real size, my proper account, but I think that I could very, very, very easily do about $50 million in volume if I just deposit a little bit more onto this exchange. So you run your own number. Let's give you a couple of examples. I've shown you how easy it is to do, for example, $100,000, right? $100,000 will qualify you for $1,634 in points. Let's say, you obviously put an extra 0 on the end of that. That is simply going to just be another 0 on the end, which means you'll get 16,340. So to give you some values, with $1,000, I genuinely think you could very easily do $1 million in volume. Put $1,000 on the exchange, trade with it, get 16,340 in airdrop points. I think that I can very, very, very easily do around 50 million on this. So 50, 1, 2, 3, 1, 2, 3. So I'm going to be looking at, if I did do 50 million over time, this is going to slowly become a bit more saturated, just by the way, but that's $816,000. I mean, these are big numbers, right? It's worth a shot. It's worth a shot. At least I think so. So that's the fee rebates plus the 10% yield on USDT dominance, right? So use the link in the description below. Participate over there. Go and take trades. What I would say is, don't trade just for the sake of wash trading and trying to do as much volume as possible. That's what a lot of people do. They just open up 10, 50x leverage, close. Then they go short, 50x leverage, close. I wouldn't necessarily say do that in case the numbers are not as accurate as we're hoping for them to be. Rather, take real trades there. So just deposit and take actual trades on the exchange. So for example, if we do get the sweep over here, this would be a trade that I would take. It has to be a manual trade because, like I said to you, the reason I didn't take the trade yesterday is, where do I put my stop loss right now? So I need to see this come down. I need to see that structure develop. Then I can place my stop. Then I can enter over here, and then I can start to ride that trade up. So just playing around over here, trading the range, look for those opportunities. If you run a bit deeper, obviously you could run into these range lows at about $100,000. Okay, cool. We've got that out the way. So that is the free opportunity for you guys for today. I always try to leave you with something, with some sort of an opportunity. Now, let's have a look at USDT dominance. This is also vitally important. It continues to march up. We've been monitoring the daily time frame. Look, guys, if you start to get daily closes above here, this is going to start to look like a confirmed higher low. So you got your low, you got your high low, you got your next high low, and this is going to be trend continuation. And therefore, this could move up to about 5.87. That's going to be quite damaging. So that's why I'm trying to provide you with opportunities like this airdrop, which you can do things with way lower risk and still earn potentially high money, right? High potential gains with low risk. Okay. Next, let's go into a couple of the other alts. This is truly do or die. We've spoken about it being do or die, and it will continue to be do or die for the rest of this week and possibly even another week. But the odds go more and more against the bulls the longer that they take, which is why the title says, this is it. 72 hours left for crypto. Of course, there is an element of clickbait in that. It's probably a bit more than 72 hours, but anything more than that, and you guys probably wouldn't want to watch because you have the attention span of a goldfish. So I had to go a little bit lower at 72 hours on the thumbnail or on the title for today. But what you want to see is a strong fight from the bulls this week to at least close this weekly candle on Ethereum either neutral or green. If you get that, the tide shifts, things look better. You probably see Bitcoin reclaiming this 21 EMA and things look decent over there. If you don't, your next support is 100K. That's it. That is it. That's the truth. If this weekly, I mean, if you don't close above there very, very, very soon, this could easily fall through anyway, even before the end of the week. But this is your weekly outlook. Bulls want to avoid the deviation of the range high. And obviously, bears want to hold price down and not let it get back above. Bulls want to see that. That's what bulls want. Bulls want ETH above $4,000. Optimism comes back into the market at that point. Let's have a look at a few of the others, just simply focusing on the high time frames like the weekly. Look, ETH is not looking too good. XRP is not looking too good. Also really struggling over here. It's below that 50% level. You need to start to recover and get back above those zones. Truly, it needs to get above, basically get above $3 to confirm a higher low over here, and things will look good at that point. We have Solana, which is really grinding into this supporting trend line. When I see a trend line that's this long, all that this says to me is liquidity underneath, which means if you sweep it, you could obviously go in for a deeper drop over there. So basically not looking good on Solana either. I would rather long something like this on strength, which would be a reclaim of the previous week's high. SUI also not looking good, on its way back down to $2. So not looking good over there. As Kay says, we are cooked until further notice. Absolutely. We are cooked until further notice. You know, I don't know what to say. Go for a drink. Sit at the pool. Stretch. Also, we are cooked until further notice. Say is rejecting and also coming down, right? You need to see more strength develop in the market. You need to see structural strength come back from the bulls, and it's not going to happen overnight. Even if you get a strong candle close this week, the real swing long trades will probably only open up the following week if you're looking for those confirmations. I think this sums it up, right? This one sums it up. I'm tired, boss. Me too. Me too. I am tired too. I'm tired too. Okay. Cardano still coming down. Potentially could move all the way back down to range lows at 54. Look, I really salute you guys and appreciate that you still come each and every day, because when things change, they change very quick as well. So you still want to be here every day. There's always opportunities, right? Just think of how many people are not here. They've already left. And now we've given an opportunity like Gravity, which, you know, it could end up being a nothing burger. Sometimes that happens. But, you know, if you don't play, you don't win. You miss 100% of the shots you don't take. So by being here, you can take the shots. And then, you know, you never know, there's opportunity over there. Maybe you get a massive airdrop. Like, look, I never took the shot on Hyperliquid. I got sick of airdrop farming as well. I took a whole lot. You guys remember grass? Get grass. Farm that thing. Look, not that it required that much effort. It was just loading something onto my browser. But it was very disappointing. It came out as a nothing burger. So I threw in the towel and I said, screw it. I don't care about these things like Hyperliquid. Well, if you go through to the airdrop calculator and you look at Hyperliquid, $100,000, these guys got paid $3,861, and I can genuinely do 50 million. So let's run that same calculation over here. 50, 1, 2, 3, 1, 2, 3. I mean, I would have made $2 million. Like, come on. And I missed it. So it is what it is. So you just got to be, and you got to try and take as many opportunities as you can with the least risk possible. Okay. Next, AVAX. Also on its way down. You're going to hope that it's bouncing there with support. This is getting worse and worse for TON. Broken below all those key levels. It's just marking down. Casper. You know, it's coming into a key horizontal, but based on the closing candles and the rest of the market, this could easily drop a little bit further. That means 0.0350. So it looks very weak. I'm not going to lie. You're coming into mid-level support over there, but your strong horizontal is going to be at that yellow line, 0.035. Tron, somehow, Your Excellency keeps it up. I don't know how. Okay. Plasma wrecked. Pump. Big support levels coming into play over here. We'll just highlight that area. You definitely want to see this zone hold, right? So around here, this needs to slow down a little bit. Okay. ASTER on its way down. It's not looking good, bruv. We don't have much to work with in terms of charts and technicals. All we can do is view maybe potentially 70 cents is your range low on ASTER over there. Okay. So hype might do a round trip back to this zone over here. You might need to lower that slightly, but we'll go with a more conservative target with these previous highs, as well as the origin of this move that drove price up. So hype probably coming down to about $29 over there. Apex still looks weak. Still looks weak. I genuinely wouldn't be surprised to see Apex full retrace all the way back down to 35. Basically, everything is wrecked, says T. Absolutely. Absolutely. wrecked. Let's just go through all the wreck charts. Here we go. Attempting this trend line over here on ONDO, but also looks heavier to me than not. And I wouldn't be surprised to see it back down at 60 cents. Are we rinsed? Well, if you're long, you're rinsed. Professor Cartel, if you were long, yes, you are probably rinsed. If you didn't take any profits, you're probably rinsed. BNB, it's been one of the stronger ones, but has it had its day? I think we have to look on, let's see the daily. I mean, it looks more likely to distribute to me. So you have a little bit of a supporting trend line. Too many times you've knocked into it. Remember, anything under that is liquidity. How do you get the airdrop calculator? I'll have to copy it and put it into the link in this show. I don't know. That's probably how. These are estimates though, just to be clear. So, okay, I'll try and arrange it and put it and paste it in underneath here for you guys. But full credit goes to Alessandro. He created it. Full credit where credit is due. Okay, next. You'll have to wait for a little bit after the show, right? For that question. Anyone that's watching live, just give me like, I don't know, 20 or 30 minutes and we'll paste it underneath the gravity link over there so you can play around with that calculator. If it doesn't work, tag Alessandro and shout at him. Okay, next. Okay, B still distributing. Let's see what else. Okay, Aether, look at that. Full retrace. Full retrace. Look at that. Absolute pump. This is what I'm talking about on some of those coins. What did I just show that looked like that? Was it, I said Apex, right? So Apex and look at Aether. That would be my expectation. Okay, Tau, one of the stronger ones that's out there, but again, do you really want to play Russian roulette with altcoins? Because it's strong today and weak tomorrow, or strong this week and weak next week. But look, if Tau can start to get back above 465, it will look decent. Let's check out Zcash. Yes, Zcash has been obviously one of the top performers. Do I have it on here? Do I have it on my list? Otherwise, I'll just quickly search for it. Oh, there it is, Zcash. Still strong, still very, very, very strong. I'll check it out in the daily time frame. But also these are huge inefficiencies. Like, I don't know, I wouldn't feel personally comfortable longing this with size. Maybe like short-term trades, no problem. It is in an uptrend. Everything looks good. Potential swing failure pattern on the daily where you swept that high. So a potential swing failure, which swing failure means it marks the end of that trend. Usually when you swing fail, you're going for a longer term correction. So that is possible. Just yesterday's candle is a bit of a warning, which means you'll probably just monitor it on the low time frames. If you start to get a shift on the low time frames, then it would open up the short. But I don't know. I don't like shorting things that are so strong. You know, for all you know, that's an ascending triangle that's just going to get sent higher. So you got to be careful. If you can start to break and close multiple 4-hour candles above these highs, then yes, it's probably shooting much higher. If you get a pullback towards this trend line, then maybe you can watch for the ascending triangle thesis, which gives you high measured moves. Alrighty. Let me see. What else? What else, guys? Black Studio says do nothing until 16K. I wouldn't necessarily say that. Just probably stick on the low time frames, farm the free opportunities like gravity, and preserve capital, number 3. Number 4, just give it a bit of time for the market structure to develop, basically. Wait for the market structure to develop a little bit better. And I've mentioned multiple times, if I were looking for longs, I would mostly be focused on things like BTC or ETH. So if you're looking for longs, you basically want to see that weekly play out on Ethereum, which means that's where you're looking for the opportunities, because ETH BTC is still theoretically in that uptrend for now, until proven otherwise. And then if you somebody that's in it for the long term and you want to just DCA, you know, get yield for the DCAing, right? Easy Bitcoin, the Easy brand is a massive business. You know, they're part of that whole Easy brand. So 1% extra Bitcoin on your recurring buys, 2% annual rewards on your total Bitcoin stash if you're leaving it annually on the exchange, so you're not withdrawing. And there's a link that will take you to that. You can go and check out the Easy brand. Like, it's only for Bitcoin, nothing else. You literally just, you can buy it through Apple Pay, connect your card. You know, there's multiple different ways. Just check out the app if you want to keep it simple. Alrighty, what else? What else, guys? So, as always, to summarize, we always like to give a bit of a summary for you. We can go into the daily over here. Have a look at that on the daily. Daily rejection directly off that 50 EMA. Here's your summary for today. Price must reclaim above 114,400, around there. You need to see daily candle closes back above yesterday's high. Yesterday's high looks like the bull trap, and low time frame. Sweep of the Monday low into the CME gap. Look for the reaction off of that. That gives you your trigger plan for a potential entry into the trade. So here it is. Sweep the Monday low, sweep the previous month's low, reclaim the previous month's low and the previous Monday low, or this Monday's low, and then the wick that's left behind off of that sweep equals your stop loss. Take that trade on gravity because you get points, and I'll remember to put the calculator up. That is it. Hope you all have a good day, and we'll see you tomorrow where we'll reevaluate once again. Hope you all have a good day, guys, and we'll see you then. Cheers for now.